Hello and welcome to another update video. Today we want to cover PayPal. We haven't covered PayPal for quite a long time now. Obviously, I think today's movement makes it quite interesting to cover PayPal. I had a lot of requests, received a lot of requests for an update on PayPal. PayPal is one of the stocks that we cover in our stocks and S&P 500 service, and a setup was recently suggested and proposed, and the market followed it very, very nicely. So for anybody who is unfamiliar with how our service works, you basically can use the Patreon link in the description. Then you get to our Discord server, and on Discord we're covering several stocks. There are daily S&P 500 updates as well as videos. And for example, here that was covered on the 10th of January, right? So you get the screenshots and the daily updates. Okay, not every stock is covered every day, but the charts are updated several times a week, and then they all get a written weekly update and a weekly video, and the higher tiers get also additional videos and live streams. But this is basically the situation that we were dealing with here sort of a week ago, yeah, and we've seen that 5-wave move up and a 3-wave pullback into the support zone, which at the time when the price touched the support zone for the first time could have already been the start of a third wave, but it didn't follow through, dipped once more into the support zone, and now it seems to be going. Okay, so all of that is described here on Discord. We covered it, and also the dip into the support area was anticipated. So in this instance, PayPal did follow really nicely the structure outlined. However, I have to say that the initial move up is not a beautiful 5-wave move to the upside. Obviously, we're exploring, and I think I covered in the last video I made here on the channel as well, we were and are exploring if really a lasting low, a long-term low, has been established here in October, okay? And I already highlighted that this could have been a 5-wave move to the upside, not the most beautiful one. So we have to be careful a little bit, because it's not an impulse, it's only a diagonal. And we also haven't broken out of these resistances, but the price is trying that now. Now we said, okay, still though, we can count 5 waves up, and as long as the support box is holding, we should be able to see the third wave rally to round about, $76 next. Okay, so that's what I'm observing. We have a potential inverse head and shoulders pattern here on the chart. The price respected the 50% retracement level. Okay, so the support zone remains valid and relevant at the moment until we really have a sustained break above $66. But already now the price is broken above the wave 1 high. Still though, I'd really like to see the price break above that last swing high that was formed in September last year as well. And a sustained break above 66 should send the price to 76, which is then the next key resistance level. There is not much there other than a gap here between 66 and $76. And to be honest, if this is a third wave, then it should get the price there. And the minimum expectation I would normally have for a third wave is the 1.236 extension. In this case, it is, funny enough, also $76, not only a previous swing high. So a good reaction to the support zone. Of course, it could still fail. Yeah, this could still fail. That's the benefit of the support zones, because these are the zones where you might want to look for entry points. And then as soon as the price makes a move like that, especially intraday, it might be worth to move the stop loss to the break-even point. Maybe some might even want to take some partial profits, but the main benefit is that even if it breaks down, which it absolutely could, I mean, we haven't broken out of the channel yet, and we haven't broken out of the $66 level yet, then at least you take the risk out. And if it comes down again, the support area is still relevant, you might want to look for entries again. Now, if you move up the stop or not, that's entirely a personal decision, because the risk is obviously when it drops down again, that you get stopped out and might still rally, you know, that's the thing. But overall, the scenario is still relevant and valid at the moment, as long as the $52.98 level is holding. So I'm still leaning carefully to the idea that a lasting low has been established, but again, only carefully, because I can't really trust this move up. It's a bit messy. Below the $53 level here, it becomes quite quite clear. It at least gets much more probable that this idea of a long-term low is not being followed, and this setup, that's all it is, it's just a setup. This is going to be invalidated with a high likelihood, and then the price might form another low, and we have the next support around $49.60. That's long-term support, and also there is a gap down here in this region, yeah, between $46 and $44. So yeah, that's just a quick update where things should be moving to if things go well. Also which support level should hold, which is still 52.98. But also I can share with you a micro support that ideally holds if we're now in a third wave. And that level is the $60.75 level. So ideally, if this really is a third wave in the making, this break below 60.75 might be an early warning that things are starting to break down, but only an early warning. More important would be 58.25, and then below that, yeah, $53. But for now, I think it's worth observing if the bulls can push the price above that next resistance level at $66. And what the next target is, I already mentioned. Yeah, that's my update about PayPal. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500 as well as in regular updates about stocks, then check out our S&P 500 and stock service. Thanks a lot for watching. Bye-bye.